Say- Awesome.
Uh,
Um, Hello everyone. Welcome to the first episode of this pod series we're doing, and a very, very special person obviously opening this up. Lily, president of Solana Foundation. That's what she goes by, but honestly, to us is like a mentor and everything you could think of. So thank you for having being here, Lily.
Thanks, James. I get to be the first guest. That's awesome.
Straight up, the first one. I couldn't think of a better person to speak on the global South, EMs, like how Web3 technologies shape it than you, honestly. Um,
Cool.
so let's just start this off with, right? I don't know anyone that honestly travels more than you, and between Europe, like EMs and the various conferences. Could I ask, like, just in your travels, even in the day to day, like, how often are you seeing crypto used in various countries? And like, what are some of the differences in the use cases of it?
Well, retail usage, I think, is picking up, but it's still not everywhere all the time, as I think it probably will be in 1 to 2 years once stablecoins become truly prolifically adopted. You always need the institutional infrastructure first, and then you're going to have retail, and they kind of go, they balance one another out. If you only have retail demand, but you don't have institutional infrastructure behind that, and I would even consider, for these purposes, I would consider exchanges to even be institutional infrastructure, then you won't
Mhm.
be able to support the liquidity that that type of economy needs. But then, beyond a certain point of adoption, if you don't have increasing retail demand, then it's also not worth it for institutions and infrastructure to go support it. So these things kind of have to grow together. And I think it is growing pretty healthily right now, where there's a lot of interest, especially post November in the U.S. around supporting stablecoins, and of course the stablecoins that people predominantly want are U.S. dollar stablecoins. So there's some pretty good policy evolution on that front that I think is going to help the stablecoin industry go from what, 225 billion, something like
Mhm.
that, to many more. And with that, then the dream for so many people around the world has been to hold a currency, let's call it the dollar, that is a strong currency, which is a good currency. And most people in the world, what, the 190 countries, so or thereabouts, don't have access to good money.
Mhm.
And so, even just anecdotally, when I talk to some of the folks that I have in my life, if I said to them, "Hey, you can get a stable coin," they're like, "That's pretty good." Once they understood that you could even get a tokenized money market fund, and this, for example, is something that Benji from Franklin Templeton, they've tokenized a money market fund, made it globally accessible with really low minimums. I think it's maybe around $100, but don't quote me on that, which makes it very accessible to people around the world. So once people understand that you can not just hold a tokenized dollar, but you could hold a tokenized money market fund, meaning you're in current conditions, you're getting 4.5% on your dollars. That's amazing to so many people around the world.
Okay, okay. I agree. I'm also use these infrastructure services. Can I understand then if you say between stable coins and infrastructure providing it with US dollar as the main currency to receive, then certain like say I have 1,000 USDT, I can put it into a card that will then let me spend in whatever country I am in the form of like
Pretty
KAST.
much.
I see. I
Yep, pretty much. That's what I do now. I use KAST all over the place. I've been waiting for this one for several years that you could just put in stable coins and spend around the world. And it's not a debit card, it's a credit card. So that's one way that seems pretty simple, but it didn't really exist until last year. And um, and then I think once you load into that the fact that people can hold in their wallet any tokenized asset, then I think you really open it up. Because right now people are thinking, okay, well, if it's crypto, then it's got to be a Bitcoin, a Solana, something like that. And now people think, okay, well, I could also hold stablecoins in there. That's pretty cool. But once you open up the spectrum to say, well, you can take that same infrastructure and hold any token, which could be a money market fund, it could be a tokenized stock. Then what you start to do is you've made the 5.5 billion people on the internet all be able to use this shared liquidity, the shared infrastructure, and that's pretty awesome.
Yep. Exactly. I mean, I was gonna get to stable coins in a minute, but honestly, if since we're already on the topic, right? I feel like stable coins is one of the biggest use cases. Whoever's listening, I don't know if you agree that in general, in the Web3, Web2 world, people agree that this is probably one of the biggest spots where to be a real Web 2.5 bridge because it's already being used, right? It's already being used across the world in many ways that you wouldn't even know. Maybe let me ask you this, Lily. How do you see stable coins getting even more mainstream where the regular person, the average Joe, will start seeing the use case of it in the global south?
Yeah, I think that stablecoins, first of all, the to a user, the first value prop of a stablecoin is that it's not whatever currency you're holding in your country is.
Mhm.
And I was looking at World Bank stats the other day, and it's something like 1 billion people across 50 countries live in an economy that has over 5% inflation.
Wow.
And or maybe I think I looked at the cutoff of over 10% inflation, something like
Right.
that. So
Right.
there's a lot of people around the world who are living in one country, or a lot of small countries as well. So this is quite a number of countries that where money doesn't work so well, and some combination of fiscal and monetary policy is not working out particularly well for the participants in that economy. So the first value prop is that it's not your currency. It's a global currency. And then on top of that, it's access to financial assets around the world that you wouldn't have had access to anyways. If you look at the number of people, let's even just start with the United States. You're probably familiar with accredited investor thresholds.
Right.
So you've got
Mhm.
to be over a million net worth or over $200,000, I think over 2 years of income, which is kind of a lot. So you've got to be an accredited investor in order to access quite a number of different investment products. And then if you want to get into the really good stuff, then you've got to be like a qualified purchaser, and there's like a $5 million threshold, which obviously very few people in the world, let's even say the United States, qualify for.
Right.
And so the good stuff, if you will, once you kind of once you put in all of the necessary filters, you've more or less got to be living in the US or EU, and you've also got to be more or less at a certain wealth level to be able to access, I'm not even talking about really bespoke private equity type of stuff, to be able to have access to a whole range of products in a brokerage account. And so there's just a lot of people in the world that even if you get on base and have access to money, which is not wildly inflating away year on year, then there aren't a lot of investments, savings, and then investments opportunities for people around the world. And that is something that I think crypto is going to change. And so when you have these tokenized these tokenized products, for example, right now tokenized money market funds are all the rage. But
Mhm.
then once you can tokenize money market funds, you can use that same tokenization capability to tokenize all sorts of other fund products. So Apollo, for example, has already tokenized a private credit fund. And why couldn't you tokenize any other number of different funds that exist out there? Now, it's a separate question as to what the thresholds, the access thresholds are going to be. There may be minimums that will still be out of reach of various folks. Okay, but the minimums are going to be lower than they are today, both in terms of actual dollar amount, and then also the barriers to even get on those platforms to begin with. So once you get on base and people have access to a currency which is not wildly inflating away, then that actually becomes a savings sink for folks that might have initially used it just for payments. And then on top of that, that becomes your access portal into a broader world of investment assets. So this kind of separation that you have in many markets between payments, savings, and investments, at least in the US as an example, and that's considered one of the more robust capital markets. You've got one app for your payments, one app for your savings, and one app for your investments. So in the US case, there's going to be Venmo for your payments, and then you'll have maybe Wells Fargo or something for your savings account, and you've got more money, you might use a Charles Schwab or something like that. And those
Right.
are completely different experiences, and they're actually really bad at doing the other thing. If you ever try to pay through your Schwab account, good luck.
Yeah.
And so that's how money works in the largest economy.
Right.
But then there is quite a bit of fintech innovation that's happened around the world. Like people always talk about leapfrogging, how mobile money and mobile phone-based finance is leapfrogged prior forms of finance. That can all be true. Uh, but then what they have not yet linked up with is the base of investment assets. So in fintechs, what you have is you have one wallet and you can pay through it and you can save money. There's also oftentimes some investment products in China, they're called 理财产品. But then one of the issues is that, well, how good are the 理财产品? And what are you actually investing in? Are you contributing money to go into some trust fund that's going to be building a soccer stadium for 70,000 people in a fourth tier city? And if so, how's that going to work out for you? Whereas if you could take that user interface and connect that with people buying fractionalized Apple stock, buying fractionalized NVIDIA stock, I think the demand for that would be crazy. And that's essentially what you can do when you have crypto, tokenized assets, and one infrastructure for everyone to use.
And that's so interesting because I feel like it's a degree of separation when usual people think about stable coins and money. They're thinking of remittances, payments, or just how to use this form of transaction. They're really not splitting it up, like how you said, into the lead champion, which is honestly the most important part right now, where Franklin Templeton, Apollo, they're doing tokenized money market funds that people didn't even think they could forget, like earning 5% on the stable coins, just not using their country's token money is already a big value add. That's insane. Okay. Let's segue this little bit perfect into PayFi, right? I feel like PayFi is one of the most quintessential words in crypto right now. There are summits, there are conferences, there are people all behind this. But honestly, when I just ask the average person in crypto, what is PayFi, they really don't see it, and the most common explanation is honestly is just helping innovative ways to handle payments without traditional banks or middlemen. And do you see this being honestly the future of finance?
Well, I think crypto is probably the future of finance. I think PayFi is going to complement what people mostly use crypto for today, which is trading. And by trading, a lot of that speculative activity. So, for me, I go back to what got me into crypto from the very beginning. That was Bitcoin peer-to-peer electronic cash system. And I think that's the big vision that Bitcoin put forward. There's Bitcoin the movement, and then there's Bitcoin the protocol. And there are parts of the broader vision of that Bitcoin gave us as a movement that Bitcoin the protocol is not currently doing. What are those types of things? This idea that you would have a unified global financial infrastructure, this idea that you could have programmable money, and this idea that you would have decentralized money and therefore the ability for anyone anywhere to help run this infrastructure, opt into it, participate in it. And in the same way that we've all more or less come around to the idea that the internet should be neutral technology, open internet, and there's power in that unified liquidity of 5.5 billion people when it comes to information. We've all seen how transformative and impactful that is. The corollary has always been that this would be the open financial internet. People use all sorts of different words for it, but it starts with self-custody, and then the idea that you would have open financial infrastructure, programmable money, and open finance gives you economic sovereignty, and then becomes a basis for self-sovereignty in a digital world. That's always been, in my mind, how I would characterize the vision that Bitcoin created. And Bitcoin, the protocol, has decided to be focused on store of value in digital gold. Maybe eventually the Lightning will be production ready and it will be scaled and adopted and so on and so forth. That's quite possible, and I think we'd all welcome that. In the meantime, however, when you talk about programmable money, you've got to have native smart contracts and the ability to build applications. And in my mind, they, in some way or another, are always financial applications at the end of the day, to use this infrastructure because it's about creating new financial markets. So up until now, it's mostly been 15 years of speculation and trading. That's all fine. That's great. that is one way of bringing capital, liquidity, interest into this ecosystem. Even though I think, as we've been seeing recently, there's a number of things about these speculative markets that get out of control and become bad for everyone. Okay. And that happens every couple of years. And every time it happens, we're surprised. So that's the trading side. But crypto, and not just crypto, financial markets are never just about trading. There's also a transactional economy. And that's actually what, when I read the words peer-to-peer electronic cash system, that's primarily what comes to mind for me. So why has it not existed yet? And is it worth building? Is it going to be interesting? What's going to be valuable about it? So I think it's obviously worth building. Otherwise, I wouldn't be here. And then the other part of it is, I think it hasn't been able to exist because you've got to have a user experience which is going to be competitive with what you can do in the Web 2 world right now. And we've all used these fintech apps, and it's a really smooth experience. It's a beautiful interface. You don't have to worry about, oh, I lost my keys. I'll never get my money back. I could be out anywhere from a little bit to my net worth. And on top of that, it's just easy to use and it's fast. So, whatever they're doing behind the scenes in order to give you the plumbing to make that a usable experience, it's being done. And so as a user, you just tap a few buttons and you're good, right? So in crypto, that's something that was not the experience for the longest time. I remember when I first started using crypto, Bitcoin. So you click a button and you'd kind of pray for like an hour that it'd be okay. And then they're like, oh, well, enough confirmations after 30 minutes. It's like, okay, cool. So you'd basically click a button, go make yourself lunch, and then come back. And then with Ethereum, huge improvement, but it was still a little bit, you click a button, you go make yourself coffee, and then you come back.
Right.
And I think you have to have performant network, which is also bona fide, permissionless, decentralized network to be able to support these payments use cases. So it's actually within the region of being competitive with a Web2 experience. And that's why I originally got interested in Solana, because I thought, wow, this is just like base level user experience is acceptable. I'm not going to say it's necessarily better than using a fintech app on every single day of the year, but it is oftentimes it really is. It just kind of feels the same as the Web2 internet. So that's what got me thinking that, hey, maybe we can actually build a peer-to-peer electronic cash system right now, which is usable by tens, hundreds of millions of people. And so, okay, so how is this relevant to PayFi? Well, because when you put a number of these things together, now you can actually have a transactional economy.
Right.
And then you look at let's go back to stablecoins. What stablecoins actually do is you take the cost and the time of settling a transaction, you take that down very substantially. So on average, whether it's by credit card or wire, whatever, the costs and the times will vary. But let's say it's roughly, most of them are between 1% to 3% of the transaction and take between 1 to 3 days to actually settle. So if that's the case, then the focus primarily has been on taking the cost of that transaction down. So instead of being between 100 and 300 bips, now you can do that for less than 30, maybe even less than 10. So that's pretty valuable, but it's not just a cost story. I think the bigger story around it is it's taking the time of 1 to 3 days and bringing that down to less than a second in many cases. And yes, there's some fiat on and off ramping on either side of that. But what happens there is you have this time value of money. And so it's not just the cost side of bringing the cost of processing a transaction down, but you also take the time it takes, brings that down. That's actually a new profit pool. So when we first started thinking about PayFi, it was really about, first and foremost, building new financial primitives around payments. But then, also thinking of new ways to monetize that profit pool, which is saving 1 to 3 days for every single financial transaction.
That I thought I was working in the space. I just learned something myself right there too. Thank you. You're exactly right. I don't think people understand the order of magnitude in which it actually helps from 1 to 3 days, 1 to 3%. Some places even like more than 3 days. And but the time.
Yeah.
Wait, what do you mean by it saves money and is profitable when the time goes down by that much, not just a percentage of it?
Yeah. Yeah. Because money, it's like about time value of money. Money is if you can put your money to work in certain ways, and you have more cycles of lending out that money, right? So if you can take your in so many different ways. Okay, so if you can take your
Hmm.
payment days down from most payment days around the world are for businesses are, I would say, like on a good day, net 30. A number of businesses are net 120 days, meaning that if you're my supplier and I'm buying, I don't know, I'm going to say like Coke from your Coke, and I'm buying Coke from you, and then I go sell that retail.
Yeah.
So it means I go get my money here, and then I can pay. You've agreed that I can pay you 120 days later. So that 120 payment days is a cost to you as Coke.
Hmm.
Because essentially you could be taking that money, you could be putting it in the bank and getting 4.5% annualized a year. So in a way, it's a way that you are financing, giving me value as you, the supplier, and me as one of your customers. So that's many ways that the money and time are interchangeable types of resources. Because at the very least, you could say I could be putting this risk-free in a bank, whereas you're not even really that sure. You don't know for
Right.
100% certainty that I'm going to be paying you back in 100 days, 120 days. I could default, and so that's where you have prices around credit that are going to be based on that 4.5% currently T-bill so-called risk-free rate.
Hmm.
Uh, and so, and if you weren't lending it to me as one of your customers, then there's many other things you could be potentially doing with that money. And so all of that is value that is not captured if that money is being lent out into the ecosystem. So that is one example of time value of money. And the time value of money is something where, I think one specific example is if you can cut out 2 days into every single payment transaction, then you could basically take the same amount of money and settle the same amount of transactions. To use crypto language, you can settle the same number of transactions with the same TVL. And so that you're much more efficient with that capital in doing the same amount of volume, and capital efficiency means that you're making better use of your money and you're accruing more value to the same number of dollars, and that frees up your dollars to go do other things. And so more capital efficient economy basically means that you can also deploy more capital to more uses rather than having them just kind of sit within a, for example, like consumption value chain, supply chain, things like that. So I think there's pretty much endless examples of this. There's also, if you want to talk about supply chain, there's the whole world of supply chain financing. So the classic issue is there's a factory on this side of the Pacific, and then there are buyers on the other side of the Pacific. And in order for them to produce the goods, and then to get them on the boat and then ship them across, I mean, it takes a lot of time. It's like 90 days, right? So they want to get a deposit before they're willing to commit the factory time in order to go build those products. And then they've got to get it on a ship, and then it's got to go sail across the ocean to the other side to where the consumers are. And and there's quite a bit of handoff and risk in that whole process as well. And so as a result, right, there's all these financing solutions, letters of credit, supply chain finance, whatever, to abstract away that risk. And that's typically taken by supply chain lenders, by banks, right? East West Bank, for example, is a big financer of
Hmm.
supply chain. Okay, so I mean, you guys must deal with this as well at Jambo. You guys must be doing these negotiations all the time with your factory. Who gets paid for what and when, and exactly what those payment terms are, and they always want to get paid up front, right? If
Yep,
you're going to make
exactly.
you 100,000 phones, I would like, I would like the money for all of those phones today. And what you want is you want the other side, the extreme
Hmm.
other side that you want is I'll pay you once I get paid from the end customer. And so where do you settle in between? Because
Yep.
that is the time value of money, right? If they're not getting that money up front from you, then that means they've got to figure out how to pay their suppliers and all the rest of it. And so that's time value of money.
Exactly. I don't
You
know how
must be
many.
having that conversation all the
Yeah, I
time.
don't know how many people listening to this pod right now will understand the time value of money in like the sense of hardware and software, like how we're discussing it. But yes, every day I do feel it.
Yeah.
Yeah, even I mean, especially because like Jambo right now ships to over 100 countries. So when we work with various distributors, when do we get paid? And most basic, when do we pay our suppliers, which you have to pay upfront before anything gets produced, which takes another 40 to say 60 days. Yeah, no, you're exactly right.
Actually, maybe we should think about getting some piloting some PayFi solutions within your guys' own supply chain.
Hey,
It could
I'm,
be,
yeah.
one, I'm just speaking totally off the cuff, but maybe one of the things you could do is customers who've got a Jambo phone, they could potentially, if they wanted to, contribute to like a Jambo financing facility, and then and they would obviously be earning interest off of that, but they could potentially help provide financing for the Jambo supply chain. So they're both a member of the community and they're also earning from the community and also potentially contributing value to you guys. So that's like also the whole philosophy of crypto, which is that communities reinvest in themselves.
Yep, 100%. I mean, the whole point of our community is why we're launching the satellite this year to connect all of the phones so you have connectivity. You don't have to be censored at the telco level. Is
I
honestly.
didn't know that. You guys are launching a satellite.
Oh,
Cool.
sorry. Wait, I thought we caught up already. Yeah, no. So we're launching a satellite probably towards the end of Q3, early Q4. It'll actually be in
Okay.
orbit of it, working with a specific company called Start that starts with S, led by a very dope guy. But yeah, essentially, Lily, right now we're 800 something thousand devices around over 100 countries, but they still have to work with telcos to get internet access, even though they're censorship resistant at the hardware level. So we're like, we can easily work with other satellite companies to provide, or we can launch our own and do et cetera. We'll get into that. But no, I
Okay,
agree with you that
cool.
the whole point is for the community to be able to contribute their compute power and their phone into a broader network. Let me ask this. PayFi, what we just discussed, it honestly seems like, and take this with a huge grain of salt, whoever's listening, because Jambo, TGE, and our token is launched on Solana, and we chose it for very specific reasons. But I'm sure a lot of other founders do as well. How is Solana so well positioned in this PayFi like ecosystem, stable coins, making sure that UI UX is so simplified? And this is not me trying to take away from anyone else in the rest of the ecosystem. I know it's very tribal out here, PvP, but everyone else is doing amazing as well. But I see most of the best UI experiences in crypto on Solana. I just want to know how you set up that.
Yeah, yeah. Well, I think part of it is cultural, and then part of it is just the tech and the community. So I think in order to actually build this peer-to-peer electronic cash system, you've got to have three underlying conditions to be true, and you can't see it as a trilemma. So I think that sometimes in crypto we've been too willing to accept that everything's a trilemma. Okay, well, what do you got to have? You've got to have a performant network. And
Mm-hmm.
then you've also got to have an open source developer community. And you
Mm-hmm.
also have to have liquidity in money that people actually use, which is stablecoins. So let's go through each of those. We kind of talked a little bit earlier about how you need to have a performant experience, which is close enough to how people experience their fintech app, like their Venmo app or whatever it might be. And that's just tech. That up until Solana, you didn't really have a chain that was that had applications at scale that had that performance. And it could actually deliver that performance for a large variety of
Mm-hmm.
applications. Okay, so that's one. Then you've got to have a scaled developer community around your open source, smart contract development framework and development platform. And well, there's been hundreds of blockchain stacks that have been launched, and there are two developer communities at scale. One is EVM, and then the other one, more recently over the last year or two, is SVM. So it's actually a whole lot harder to build an independent developer community than it is to launch a blockchain.
Mm-hmm.
Because you can launch a blockchain with 30 really cracked engineers. But
Right.
if you're going to build a developer community, you've got to inspire people to do a major life and career change and take a bet on your GitHub repo, which is a little bit crazy, if you know what I mean.
That is kind of
You,
crazy.
you know, and you've got to inspire those people at scale by the thousands to spend like the next years of their life toiling away trying to build like decentralized applications. And that's really a lot to ask. It's hard to do. because you can't pay people to do that. People have got to opt into it, right? And also, people are going to opt in because they see the opportunity and they see an opportunity to make something for themselves and for them to be willing to take that risk, and also because it's a cool culture and a group of people that they actually want to be spending time in. Okay, so that's the second condition to have an open source developer community at scale.
Sure.
And then the third is you've got to have liquidity money that people use and that people are willing to accept for goods and services. And no matter how much we love Bitcoin and love Satoshis, people just don't denominate their lives in sats today. And
Yes.
people probably won't, because the whole point of Bitcoin is you should never sell it. So paradoxically, it's not going to function as that medium exchange for quite some time.
Mhm.
So up until now, you didn't really have liquidity in stablecoins at scale. And it's been growing very substantially over time. So now we're, what, 225, 250 billion, something like that. But
Mhm.
for a while, it was substantially less. And it was largely just used for centralized exchange to centralized exchange or transfer, rather than actually being used on chain for for other purposes. I would argue the reason why it wasn't is because you didn't have performance-based layer and a developer community that was building on top of that performance-based layer. So
Right.
you really have to have all three of these things come together at the same time. And I think as I look around, the only place that really has that at scale, all three of those things at scale, is Solana.
Understood. And let me ask this then on Solana, since we're on the topic, everyone knows Toli, Raj, yourself, Solana, amazing. They know Solana Foundation as well, but they might not have heard of Solar. But I know Solar as, a founder in Solana every day and its impact to users. And I think this question ties into, hey, what if someone just a founder that's amazing from Web2 came that completely doesn't know Web3 and they chose Solana, but how do I access the various tools in Solana? How do they come about in seeing this if they can't access Lily, the president, but they're like, hey, I want to tap into Solar for Asia. I want to tap into Solana All Stars. I want to tap into Solana Super Team.
Well, that's those I think are those organizations I think are some of the most important in Solana. Because I think it's the whole concept of crypto from the very beginning is how we've been. I think if you look the last 100+ years, we've had a lot of discussion around what is the appropriate ownership model for society.
Mhm.
There's been the government ownership model, and then typically there's the government ownership model, let's call that communism or some flavor thereof. And
Right.
then that's true. And then
Yeah.
there's the corporate ownership model, which is capitalism. And that's been the spectrum we've talked about for ages. It's either
Mhm.
communism or it's capitalism, and that was the Cold War. And that's still very much the battle lines in every country around the world.
Yep.
And what is the ownership model? Because whatever the economic ownership model is, then the power frameworks are intimately related to that. So those are the battle lines. What I thought was so interesting about Bitcoin from the very beginning was this idea that of community-based ownership. And so this concept from the very beginning that the community would be responsible for building and also reaping the benefits from the expansion of the community. And so it kind of broadened the spectrum of either corporate or government or corporate ownership. That's a spectrum to say, actually, the spectrum is broader. And now we can have mechanisms of community-based ownership, which sort of be more adjacent to the capitalist part of it. And the basis for that community ownership is mathematically enforced individual ownership. So in many ways, I think what crypto is about is not even really having a conversation within the spectrum that everyone thinks is like the
Mhm.
end-to-end range of possibilities. So what that also means is that the way that you build an ecosystem is you have to attract, empower the communities they're in, and you kind of let the communities communities are the fundamental to sort of empowerment of the entire ecosystem, and also because Solana is supposed to be a global network. At the end of the day, it's just a GitHub repo,
Right.
And what gives it life is the people who care about it and the people who want to build on it and the people who imbue value into that. And that meaning is going to vary very dramatically between what people in the US think and what people in Germany think and what people in the Chinese speaking world think. And that's as it should be. And no one really knows what the answer to that is going to be. And that's one of the reasons why we've invested a lot in these local communities around the world. I think there's probably 20 different super teams, Solar, All Stars, La Familia around the world right now. And that's, I think that it's something that's very easy to talk about, to say, oh, we have a team in this geography, right? And there's no shortage of blockchains that have gone and built a team in fill in the blank country. But I think philosophically, I would like to think the way we've gone about it uh, comes from a slightly different philosophy, which is all about, you have to empower local communities because ultimately what this is all about is it's about scaling a community ownership model.
That honestly, I never thought I would expect to hear that. End of the day, it's a GitHub repo. What gives it value is the people, essentially. And to be
Yeah.
honest, like, yeah, I completely agree. Like, honestly, I don't know how you guys do it. Like, I went to Solana APAC Summit last year in Malaysia, right? There was APEC Summit that just happened in Mexico City. My friend is
Hmm.
flying to Cape Town tomorrow for the Solana Founders Retreat in South Africa. I'm like, who is organizing this? And I'm thinking Lily is behind all this as president, but it's all community run. Like, how is that possible for the community to run all these amazing
Yeah.
events?
It's kind of mixed, but then if you have people who are really excited, one of the other points that is sort of philosophically, ideologically, I think pretty powerful and at the root of all of this is that to make a change and to create something amazing, it doesn't take a ton of people, especially when it's young, right? So if you're in let's use South Africa as an example.
Mhm.
There's probably already quite a bit of latent interest in Solana, and in the various things that Solana would enable. It doesn't take a lot to really activate that community. Sometimes all it takes is two or three really passionate people. And that's also what I think crypto is about, that it sometimes it doesn't take a lot of people. It takes a good idea. It takes a lot of grit, takes obviously a lot of competence, they're willing to take a risk, but then a couple of people can have an outsized impact. And I think that's also at the core of why people are very optimistic about technology and optimistic about around the global talent market, which is technology, and the ability to empower people potentially around the world to have those opportunities regardless of where they might have been born or where they might live. So that to me is ultimately the most optimistic view that a couple of people uh, can can do something amazing and can bootstrap themselves into doing something amazing. So that is that's at the very heart of the entire 30 years of tech and startups. And
Mhm.
that's, I think, also why there's a lot of, there's people see like tech and startups as being very sexy. It's not just about
Mhm.
the fact that there's been incredible, like outrageous wealth that's been created from it, but it's also the idea that these people could kind of like, the whole lore of people starting in a garage and then making something amazing. And I think that like those core ideas and that core possibility, I think, is also what motivates Web3 in the same way that it motivated Web1 and Web2. To build a community, sometimes it just really starts with a couple of people.
Agreed, 100%. I know we don't have too much more time. Really appreciate you. I want to shift one last gear and talk about DePIN. I think this is one of the most underrated aspects of Solana that people don't talk about, decentralized physical infrastructure networks. And my question is just, how is every DePIN project on Solana?
Well, you should ask the DeepIn founders, but it seems to be the thing. Uh, let's see. Helium came over in, I believe, June of 2023.
Okay.
That was a big deal for us because Helium was one of the first DeepIn projects anywhere and one of the first DeepIn projects at scale. Like many other projects out there, they tried building their own L1 and then realized at some point in time that this is a really big lift. We've only got so many resources, so we can either focus on building the best wireless network, or we can split some of our time and try to build an L1, which is going to take a lot of work, a lot to maintain, and what is the cost benefit of that? Although you could also say that blockchains themselves are deep in networks.
True. True.
So I think a lot of people have come around to that conclusion, which is that outsourcing the incredible amount of work it is to build, maintain a validator client, a validator network, which is decentralized, permissionless, global, all the rest of it. You know, let someone else go do that. So that's when Helium came over in the middle of 2023. And since then, I think a number of other people thought, okay, well, if Helium did it, let me check it out. And liked what they found. But then I also think very practically, in a deepened network, the you don't need a lot of incremental blockchain innovation over what you can do today. It's essentially smart contract with a fungible token.
Mm.
And the value of crypto is its ability to provide an incentive to bootstrap a network. It's not, the hardware is more or less already there. The software can more or less be built, but this is the way that you incentivize people like yourself and myself to go put that camera on your dashboard or to share your data or something like that. And if that's the case, then you are potentially trying to motivate a network of hopefully millions of people, in which case you also need performance. You also need fast and cheap. And so I think you put those things together that the tech can actually fulfill the use case today out of the box and do it well. And then you have the network effect of other projects and human beings around that. And then that's where you have the network effect around DePIN. I think DePIN is awesome. It's actually real world useful. And there's always been the question as to like what's going on in crypto, which is not just
Right.
wild speculative trading.
I'm saying.
DePIN is that, it's actually useful, and you're creating economies that would not be able to exist outside of crypto. So I agree with you. I think it is right now it's been a little bit overshadowed by the other trends that have happened
Right.
recently, like meme coins. But actually, a year ago, DePIN was the thing.
Mhm.
And now these days people are saying that Solana is the meme chain, but I remember a year ago when Solana was considered the DePIN chain, and before that it was the DeFi chain and the NFT chain, the gaming chain. You add all that up together, and Solana's over time just kind of the everything chain.
Everything. And honestly, another way of saying the everything chain is the chain that everyone would spend their money to speculate on the products that are inside, right? That's just another way of saying for the meme coins. You look at the gambling applications from Pump Fund to Polymarket that might not have had PMF before, but now that everyone is speculating, everyone is willing to put transaction costs in. Where is it happening though? Then you look at the real X's no, it's an on Solana. No, that definitely makes a lot of sense. And let me ask you, were you surprised when people called Solana the meme coin chain, that every meme coin was launching on Solana, that somehow Vector, Tensor, Pump Fund, everything is settled on Solana?
Well, people are just going nuts for memes, and when they looked around, they thought, okay, well, what am I going to use that it's got to be performant? You can't launch a meme
Mhm.
coin if it's going to cost you, $10,000 just to get it launched, So that's again, one of the hooks oftentimes is just the performance, and I don't think that performance should be seen as like I just feel like historically a lot of the conversations around performance have been kind of theoretical. And I
Mm.
think it's kind of weird. Like people will be like, my TPS higher than your TPS. And that's not the end goal, guys. Like the end
Yeah.
goal is to develop infrastructure, which is a technology platform, which is going to help developers build apps that add value to users. And that's the whole point of it, guys. It seems so self-evident. I consider this to be self-evident, But as I look around, I realize that's not actually been the driving perspective for quite a number of people in this industry.
What do you think has
So
been?
I think it's been about building cool tech and building cooler mechanisms and building more elegant mechanisms to do a thing. You got to have cool research in order to build cool things, but cool infrastructure but then oftentimes people just get stuck there. Like this mechanism is better because it turns these knobs in order to make capital efficiency a little bit higher, assuming that we're all going to be using AMMs down forevermore. You're like, but the end goal is not to optimize your AMM, right? The end goal is to create infrastructure that can provide the best available uh, financial markets experience for as many people as possible. And I think it's just a slightly different way of framing the problem
Copy.
around users rather than developers. Developers are on the path to creating value for users. And I
For
think
you.
that's a core difference between the Solana ecosystem and a number of others, because it's very clear to us this is a technology platform to be building applications that add value to users. And I've sensed in certain parts of the industry, there's sometimes even this attitude of, well, if they don't understand what we're doing, we don't need them anyways. Wait, what?
That was the quote for Bitcoin. It shouldn't be used by everyone else after Bitcoin.
So I just think it's a really odd thing. And I didn't realize until more recently that, I just assumed, of course, we were building this to like create better applications for users that you can only do in Web3. But then I met quite a number of people, largely outside of the Solana ecosystem, that really have this mentality of they're either explicit or implicit, which is if you don't get what we're doing, if you can't handle that UI, you're not good enough for the UI. Okay, guys.
That's a tough one. That's a tough one. I'm not gonna lie. I mean, it seems like
Yeah. Or like,
yeah.
where you're gonna go back to like the rotary dial phones, right? You can't
Oh
figure
my
it out
God.
enough for you.
Yeah. I mean, at the end of the day, it seems like the common theme that we are all building for, no matter what ecosystem, is the end user, the consumer. And I feel like some might say, will the, let's put it this way, forget what chain, what anything. When a founder is building a product for the end consumer today in Web3 for the end user, do you think they should be thinking about mobile, or do you think they should think about the end user? Because the end user seemingly would be using mobile most of the day, but seemingly most products in crypto are not built for mobile, but more built for.
Yeah. Well, most people around the world use the mobile phone as their sometimes only portal into the internet and I think what we've realized, with Solana Labs building Solana Mobile and Seeker, and what you guys also came to the realization early on, is that this experience is not optimized for mobile right now, and there's a number of different reasons for that. One is the App Store restrictions on crypto related products, and the ability to monetize apps where app stores may recognize GMV as being the 30% taxable, so the 30% taxable kind of baseline, which would make it uneconomic. So there's been that. And then also security is a bit more of an issue, because if your seed phrase is not secure, it's a little bit different from having someone hack your email. If they hack your wallet, it's a little bit of a different situation. So the security bar is also higher. And so that may require different trade-offs to be made in terms of software and hardware design. So I think those are the two reasons. One is around security. The other one is around the economics of app stores. And I think that having mobile first applications, mobile first experiences is gonna be pretty critical. So I'm also happy that the folks that are going big into mobile is probably Solana at the top of that list.
Yeah, couldn't agree more.
That's where
And
that's
yeah,
how you meet users where they are.
yeah, no, exactly. I mean, I grew up in Congo, and no one owns a computer
I know.
there,
I
so
know.
not
I
to be
know.
extreme. Yeah.
Yeah. I mean, I think what you guys are doing is awesome. And I can't believe it took us I can't believe I had so many of our mutual friends be like, Lily, you finally meet Jambo. And I can't believe it took us as long as it did for us to actually meet one another. But you know, as we joke, love at first sight. So.
For real. No, I'm not even joking when I say you're like my mentor. You're my self-proclaimed mentor. I never ask you for permission. I just say it for real, Lily. But honestly, you are one of the realest people I've ever met. Every word you speak is, I don't think you ever sugarcoat anything for anyone, honestly. For real.
I've been accused as such.
Hey, being African, that's literally the real thing. Yeah, that's what we value.
I also got to live in Africa for almost a year, but not Congo, South Africa.
Where, Cape Town or Joburg?
Joburg. I was in Joburg. I was working there. So probably a little bit different from Kinshasa in the 90s.
Okay, so I mean, I grew up in, Kinshasa,
Yeah.
16 years, and it's regarded as top three most dangerous countries in Africa. But I'll tell you one city, not country, one city I don't go to, and that's Joburg. I go to Cape Town any day. Love it, great food. Joburg is just so dangerous. How did you live there for a year?
Well, okay, I was in Sandton, and so there's pockets of Joburg. But you know, I got pretty good at you drive on the opposite side, for me, the opposite side, and then you just do various things like when you stop at a stoplight, you leave room in front of you. You know, you have like the interior metal gates that you close when you go to sleep.
Hmm.
And you never carry cash on you. There's like little things like that. Never really walk around, even in Sandton. Uh, and let's see. Oh, but I at the time I was working for McKinsey at the time,
I see.
and the folks that we were serving was the train company of
Hey, you
South
don't have to
Africa.
say it. You don't have to say it. It's
Yeah.
all good.
Yeah. So what it also meant is I went to train stations all around South Africa. And I remember spending quite a lot of time in Centrorand, which is the large, like one of the central train depots outside of Johannesburg.
Right.
So yeah, yeah.
Oh my
Then
goodness.
Transnet. That was quite an experience.
Okay. And you were in Joburg for like close to a year.
Yeah, close to a year. I loved it. It was awesome. We
Okay.
went downtown Joburg. Didn't really walk around on the street that much in downtown Joburg, but yeah,
Yeah.
it's been everywhere. I even slept one night in Central Rand.
Jeez. All right. You are different. You are different. I gotta say that. No, it's for real. It's different, Lily. Like, I don't think people who listen to this pod that haven't been to Africa will understand why I say that, but it really is different. A guy that grew up in Congo is really afraid of Joburg, and the president
Really?
foundation lived there for a year and enjoyed it. No, so I'll say this: all my relatives that lived in Joburg, they either got robbed or murdered, so they all left. Every Chinese person in Joburg left Joburg, basically,
Hmm.
that have been there for more than a generation. It's insane.
Uh,
Yeah.
That's the first time I've heard that people would take Kinshasa over Joburg. It's a
Oh
good
no, no, no!
point.
I never said they take Kinshasa over Joburg. I was just saying I was afraid of Joburg, even though I'm from Kinshasa. I don't know if they'll do that. Yeah. All right,
Oh
everyone.
yeah. Okay.
Well, listen, we
Awesome.
had Lydia for a full hour today. Y'all go listen to this podcast 2 times on 0.8 speed because that's some knowledge that was dropped. Thank you so much, Lydia.
Thanks, James.
Cheers.